Good morning and welcome to another week of the Global Alpha podcast with myself and JT again. We're just going to be breaking down what happened last week in the markets and having a look forward, as well as talking about some topic points that we've seen coming up quite a bit lately that I think is quite important in relation to AI and everything that's going on with that at the moment. So, is it a bubble? And is it in line with .com? I guess is the yardstick of measure.
Yeah, that's a big topic there because obviously, if we didn't have this AI rally in the markets, you can just see pretty much, apart from gold and the metals, everything else is pretty much gone sideways or lower. So the whole market or the whole rally is just based on AI making money. So big question to ask. So it'll be interesting to see what your conclusions are, Rich. So let's go on. What's the next page? I'll just move on. Where's the presentation? Come on. Here we go. So there we go. Okay, so what are we looking at?
Just quickly this week. So last week in review, very volatile week, as we were mentioning in the last podcast. Tariff talks, Trump tweeting, always can send the markets into haywire. So it's definitely something that we'll be speaking on. Earnings season back into full swing. As we were mentioning last week, we're really impressed with the TSMC's earning and guidance. We saw some pretty strong results from the banks, the big banks in America. We're still seeing AI being really the momentum behind the market as a whole. So let's get into sort of the nitty gritty of it, I guess, terms of what happened last week. So if you just want to switch over to the heat map, I think that's a good place to start.
Yeah, nice. Oh, well, just before we go on that, so I know I wasn't here last Friday to chat with Mark about it, but so he cautioned that so the bank risk there, there were a couple of regional banks in America that actually got sold off on the Thursday night, Zion Bank and Jeffries. And so what Mark looks at is he actually looks at the credit spread. So it's just basically the difference between government debt versus, say, high yield corporate debt. And that's actually starting to blow out a little bit. So it just means that people were looking for yields before, and now they're actually reversing that and looking for more safety in the government bond. So the way Mark mentioned it was to be alert but not alarmed, meaning that it's just one of these things that he's seen previous times. So keep an eye out on that. And I have noticed that. So one of the things that I do look at is the private credit space, and that's actually just ballooned out over the last say 5-6 years to become a massive entity on its own. And I've just noticed some of the private credit ETFs out there that I follow are all in fairly solid downtrends. So keep an eye on that for all the bears out there. And then obviously we got Trump doing his taco thing. And I did mention this morning that one thing that it kind of just highlights is that and it's not well known. Especially if you are in the States, is that China's position in this sort of negotiation is quite strong. I've been following China for a very long time because obviously here in Australia, they've been buying up pretty much any natural resource out there, and the amount of dominance that they have in the supply chains, it just shows like if China, decides to just stop, exporting whatever they decide to, USA doesn't have a choice in that, and that's why we saw massive moves in, some of the rare earths. So, we were, following UAMY. We made a good 30% profit on that, Rich, and then it almost doubled after that. So, but then now it's back at $10 as well. So, very volatile moves in some of these markets.
Prudent management from our side.
Exactly. So let's go. So I'll let you kick off, Rich, on what you see for. So this is a weak performance for the US markets.
for the last week. So a bit of a mixed bag, as we can see there. A few of the larger names didn't end up recovering towards the end of the week. I think that's because really a lot of them had such drastic moves on the upside. We saw a bit of negative sentiment come into the market, and sort of the sellers come in and take profit and things like that. So really the only green in the tech space that we're seeing is AVGO Broadcom, which was one of our previous recs, in Google. Everything else seems to have taken quite a bit of a hit. And I believe AMD did quite well, but ended up retracing towards the end of the week, even though it announced a massive deal with OpenAI. So it's just interesting to see that even though there was big talk in that space, the performance hasn't really resulted there.
Yeah, interesting. So one thing I would like to highlight is that I actually, if you've been following me at all, is that I run scans. So anytime the market's price makes new highs, a scan just pops up and it kind of just highlights me on what's moving. And I have noticed that Walmart, Home Depot, there's been a few retailers that I normally wouldn't follow, but they've all had a bounce off the lows recently. So that could be tariff based. Basically, people just stocking up, the consumers just trying to get more goods in. But interesting that they've shown. I mean, I'm not saying that this is a trade or a start of a trend, but just one of the things that I've seen that caught my eye. And one thing, another sort of area that has caught my eye is the home builders. So anything home sort of related. Earlier on in the year, I highlighted that, look, these things are looking good. That's actually all reversed now. And it'll be interesting to see if the US consumer can actually bail out the US markets one more time.
Absolutely. And what about healthcare? Do you think you've seen a bit of a change in the trend on healthcare overall?
Yeah, I mean, like, let's all clap our hands to Warren Buffett again. So he was, I remember, he was one of the first to actually start buying United Health. As always, near the lows. He's always a big value long-term investor. And when he came out and started buying United Healthcare, I was like, okay, here we go. He could be another sign that healthcare's bottomed out. Fortunately, after that, Trump came out and said, he basically helped the pharmaceutical companies out to sell more pharmaceuticals within America as well. So that caused some of the pharmaceutical names to bounce from there. And then, just in general, and then, you've got some of the bigger names here in Australia. Obviously, CSL's bounced off the lows as well, thanks to that pharma deal. So, it looks like the lows are in for, that pharma sector, the healthcare sector. And, it should make sense because, obviously we've got aging demographics here in the West. And, we've got more demand for healthcare as the population ages. But, that looks like that little pullback or sort of non-performance has ended now, and we're starting to see that tick on higher.
Absolutely. So some new sectors to watch, definitely up and coming. Moving on, just directly into the earnings, we saw those banks post those earnings, as you mentioned before. And interestingly enough, just to go back to what you were saying before, some of the CEOs actually came out and said, there's geopolitical uncertainty and tension at the moment. So even they advised, investors to be vigilant. So it's just an interesting point that even though they posted those, pretty stellar results, they're still, airing caution.
Cool. And then, US stocks this week. So you've got a few names there: Netflix, Tesla, Intel, IBM, US defense stocks. What were your highlights for the week?
There's a fair few more, but they were really the ones that stuck out to me straight away. Look, we've got an open recommendation on Tesla, so that's one that we'll be closely watching. And we've had that US defense theme or the global defense theme running. So various companies reporting this week: RTX, Lockheed Martin, General Dynamics, I believe Northrop as well. So waiting to see the results of what we've been expecting for the sort of this 6 month period previously.
Yeah, cool. So I mean, like we'll go on to the actual earnings calendar in a second. So one thing that I have noticed is that IBM's been on a bit of a tear of late. I've got a mate that actually works for them, and he helps build data centers. And I remember when he was talking about their focus, I was like, okay, well, I'll keep an eye on IBM from that regard there. So, yep. And one thing I did see is that Tesla had a nice move on the Friday. And so it's consolidating around that sort of 420 to 440 area.
Mm-hmm.
And usually when a big name has a big jump up to that level and consolidates, I think it's getting ready for that next move higher. So keep an eye on that, because obviously Tesla is at the forefront of all of this robotics and AI space. Okay, next slide. Here we go. There's the calendar for this week. What's your highlights for this week,
So
Richie?
I've missed a few important ones there. You got Boeing on there. You've got AT&T. You got SAP. Look, we're right in the midst of earnings space at the moment. I think it's really important to sort of be paying attention to anything that's coming out, so that you can really be aware of what sectors are doing well. And you can see a really big mix there of tech, defense, and other businesses. So I think there's not really any that you'd be looking at in particular. We're just keeping an eye on everything.
Yeah, busy time again for the US markets. So
Absolutely.
is there do you want to give a hint out at all what our rec is for this week, Richie, or do you have any names that you're thinking of?
Look, I think that we'll keep that for paying members at this point in time, but we'll definitely have a rec out for these, for this week.
Okay, great. No worries. And okay, is that question that we started off with? AI, is it a bubble or is it just getting started? So what's your thoughts on it, Rich?
So really, there's been a lot of sentiment around this for a few years now, but I think recently, especially, I was watching a lot of content over the weekend, and there's a lot of regular people that are starting to talk about, is AI a bubble? Is there too much money going into it? And what's the material application for a lot of these, these huge amounts of money being spent? There's commenters even where the head of Meta, Zuckerberg, said, we're spending huge amounts of money, but some of this money spent could be being spent in the wrong places. So it's just interesting to see that there's a bit of a sentiment around here saying, is it in line with the dot-com bubble? I found some graphics that sort of help shed a bit of light into the network of funds and how it's moving within AI. So I thought we could look at those in a bit more detail and just see, what our sentiments are. And then I've also put the percentage of returns or revenue based on the amount they're actually spending, which I thought was an interesting topic to cover.
So basically, you're saying that they've spent all this money, but is that chart just saying that they're going to get 12% of their revenue?
And that's in 2032.
Mm-hmm. Okay, interesting.
So you're spending $100, and you're expecting in 7 years' time to get $12 back on that $100. So not the best investment if I was taking it. And I thought that's a really interesting thing to look at, that where these stocks are rallying so aggressively in the short term for a projection like this, 12% in 2032. For me, that does put off a few alarm bells that this could be, a bubble that is ready to burst.
And what you got to remember is that, look, I wasn't there for the dot-com bubble, but if you have a look at, how quickly it reversed or how volatile it was before it reversed, I remember, there's some great traders out there. I mean, like, it wasn't Tudor Jones. Anyway, what he was saying is that he shorted it, but he was maybe like 3 months early. And he just said, like, he shorted it, made a new high, got stopped out, and then 3 months later he would have been in the money, and then that would have been close to the top. So it just shows you it's going to be very hard to time this and trade this. I mean, obviously, we're in a lot more computer generated trading environment as well, so things will move a lot faster. But my take on the whole thing is that at the moment, the momentum algorithms do have control of this market, and so until we see that reverse, and it will reverse quickly, I still think it's a buy the dip mentality out there. So till I see maybe 2 or 3 dip buys just get smoked and then sold into, I'll reverse sentiment then. But at the moment, I just dare say it, but everything's expensive, but it looks like it's probably just going to keep getting more expensive. So yeah, I do think investment in AI is a bubble as well. But yeah, it's a case of you have to watch it very, very, very carefully, because the thing is, if let's just say we're out by even 6 months, the market could be another 20 or 30% higher, and you need that sort of alpha on your portfolio just to beat inflation in these days. So yeah, interesting times. It is it is a little bit worrisome for people that look at traditional value metrics, and I do think that they will have to mean revert and make sense at one day, but for the foreseeable future, or for the short term anyway, I just see this thing grinding higher until we see the next shot. So
absolutely. So I think prudent management then would be key. Risk management. If you're up 20% plus on a position, feel free to trim it, but keep the core position in there so that you can any sort of downturn that we do see, you've got cash on the sideline.
Yeah, absolutely. Okay, and obviously that's what we're here for, and that's what people will pay us for. Okay,
absolutely.
So that was the last page, was it, Rich?
Absolutely.
Okay, cool. I'll let you sign off.
So thanks for attending this week. A little bit of a debate on AI and what our thoughts are. I think again, just risk management is always important to have in markets, and you can hold on to a winner, but it's always good to trim those positions. And if you need guidance or need to be, you need that assistance on when to sell, when to buy, give us a call. We can put you onto our global alpha recommendation service, or we can do full service and do the trades for you, which is generally where clients are the best in line with our recommendations.
All right, thanks, and thanks for listening in. And we'll see you next time. Thank you.
Stay safe. Take care.
General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.